Stocks are sliding big today as the GDP numbers that came out were really good.
What? Bro, what are you talking about, man?
How does that make any sense? Well, I'll break it down in this video and we'll talk about whether or not this is a dip to step in and buy, or if we should wait for lower prices. Let's jump into it. And this can often be confusing. You get good economic data and the stock market goes down. Well, today my editor behind this channel, who does a great job, by the way, please don't make me look silly. He says, why are stocks down so bad if GDP and unemployment numbers came in better than expected today? Again, we had good data, yet the stock market sold off on it. I said I'd explain in today's video, so let's go through it. Basically, the big idea is that if economic data looks too good, the Fed is less likely to feel the need to cut interest rates to help out the economy. If the economy looks good, the Fed doesn't really need to cut rates as much. If the economy is looking weak, the Fed likes to step in and try and help by lowering borrowing costs. But I mentioned that I largely disagree with that way of thinking because it's sort of this weird thing where people start hoping for bad news, right? You almost you have to be careful what you wish for with this stuff, because if you want bad news, I equate it kind of like the idea that begging for rate cuts is like hoping you get sick in order to get to have some medicine, right? If you want weak data so that you get rate cuts, again, to me, that's like a weird fine line, and could very quickly spill into economic downturn, which I personally think is not as attractive as a good stock market environment looks like. Strong economic growth and not really a need for rate cuts. Maybe a cut here and there helps to continue to spur things, but not needing rate cuts historically is actually a good thing. Needing rate cuts is usually where you get major market sell-offs. James also said he'd vote for me to be put in the Fed. I said, please don't. But he already responded, said, too late, get those bags packed. So I guess I'll see you guys in a few weeks at the next FOMC meeting. But on a serious note, take a look at the S&P 500. We did pull back here the last couple of days. This is not a huge pullback. You're only talking about a 1.6% pullback at the time of recording this. And it does seem like there's already a little bit of a buy the dip opportunity happening here in stocks so far this morning. We'll see how this plays out, but let's take a look first at what the data was that caused a little bit of slide in stocks. So GDP numbers, I'm looking at the macro screener within the stock box. GDP numbers beat by a whopping 0.5%. GDP growth came out at 3.8%. The forecast was 3.3%. So we're talking about an economy that is growing very, very strong relative to forecasts. Overall, the US economy, again, I know this sounds a little bit like gaslighting because for the average, middle-class consumer, it doesn't feel that great out there. But in terms of a gross domestic product output, the economy is growing very strongly. And it's not necessarily fair, but the wealthy class is really performing really well, spending and contributing to the growth that we're seeing in the overall nominal output of the economy. Additionally, jobless claims this week actually came in better than expected again. We only had 218,000 unemployment claims compared to the 235,000. This is still very low. You got to remember, you're talking about an economy that has 330 million plus people in it. We also have services PMIs, which recently came in better than expected. Retail sales numbers were better than expected. So it's hard for me to really say that the stock market looks incredibly ridiculously expensive when you have a growing economy and AI stuff still boosting. And I've definitely shifted a little bit more bullish on stocks. And even though the stock market itself is selling off today, I actually think that this is potentially an opportunity to start shopping around for individual stocks to buy. Let's break it down here on the S&P 500. We're looking at ticker symbol SPY, still in a very strong overall upward trend and coming into contact with our first major area of support here on the daily chart. I'm really curious to see how price reacts here, and personally do think that there may be some opportunity to start scooping up some names that may be oversold in this market condition. We'll talk more about that in the rest of this video. I think your next major area of support would not be until you get down to the 635 level on SPY. And while I do think that overall stocks are still pretty expensive, I think they have some pretty good reason to be, and I just like the idea of, now that we're getting some dips, potentially looking for some specific names that may be a little oversold. Take a look at the monthly chart, and the SPY is still in a very solid upward trend. However, is it possible that we get a further pullback in this upward trend? Yes, we've had 1, 2, 3, 4, 5, 6 months really of just nothing but gains. Yes, you had the big sell-off in April, but it quickly turned into a massive buy that just kind of ripped for the next several months. So on a monthly chart basis, is it possible that we sort of pull back through this whole low to high movement? Well, it's very possible. We could actually see a pullback down to test those prior highs around the 600 level if perhaps, for example, oil prices and a stronger dollar rising, right? If both oil prices and the dollar are moving higher, this could cause a little bit of a give back in the stock market world. Let me explain what I mean by that. Here's a look at the dollar index making a move higher and the 10-year yield also making a move higher. Bonds are actually a little bit lower here today, as now it seems like the market is pricing in the possibility that if the economy is holding up okay, perhaps we are going to see a little bit of a delayed further rate cut from Powell and team over at the Fed. But I'm personally not too worried about the lack of rate cuts and actually still would prefer to continue to watch corporate earnings growth and the overall state of the economy to drive prices higher for stocks. I think that we're in a strong GDP environment, which is an environment where I generally want to be buying stocks on dips. And so I'm watching this area. Let's also take a look at the NASDAQ or the triple Qs. If we take a look at QQQ here, pulling back and also eyeing up this area of support around these lows here, 586, so 585, let's call it. Price is pulling back here and maybe coming back to test the low end of the Fed day lows that we saw about a week and a half ago. Taking a look at some sectors here, energy stocks actually look really attractive to me personally because I think that oil prices are going to move higher. I've talked about that on my other channel. My main channel is Trader Nick. This is my secondary YouTube channel, Trader Nick Stocks. But I do think oil prices on a macro basis look pretty good. Basic materials also getting hit pretty hard. Industrials here, I actually think industrials, if they do get a good bit of a dip here, could be an attractive buy. Let's take a look at some of the most exciting stuff in the market. Of course, the semiconductors world. These are your AMDs and your Qualcomms and NVIDIAs of the world, right? The powering the AI revolution was looking a little bit stretched there, right? So we had a huge run up on these stocks and the semiconductor ETF SMH to me looks like it could make a pullback to the 300 level, and that would still be perfectly fine within the context of what I still believe is a strong upward trend for semis. Real estate stocks continue to look mixed, and with less rate cut probabilities coming in after today's strong economic data, the real estate sector to me does look a little less attractive. For people watching home builder stocks or real estate stocks, what you really want to see is the long end of the curve when it comes to interest rates come down, right? You want to see the mortgage rates and applications for those to be more favorable to those companies. So if we take a look at like the 30-year yield, you can still see it's still pretty elevated from recent years. So buying homes is still very expensive for the average American. Here's a quick look at NVIDIA, still sort of oscillating here back and forth at the highs. Here's AMD, sort of a similar story, although price has been able to find some support around 152 or 150. So let's see what happens if price does come down to test that again. And we have Tesla pulling back here a little bit. I actually would not mind at all if Tesla continues to push lower, as I've sold calls on my position at 400 and 355. So I have given up all of my upside past these levels. I own the stock from much lower than here. Let's take a look at the Tesla trade. So here's an update on my Tesla position, which if you've been following the channel has been one that I've talked about a lot. It's my biggest position in my portfolio and is likely to not be so big pretty soon. I'll tell you why. I own the shares at an average stock price of $235 per share. It's currently trading at 425. So the stock has rocketed higher here. And on the shares that I own, I'm up about 81% even after the pullback today. However, I've also sold calls against my position, which has cost me a little bit, right? So you can see I'm down 6,400 and 11,600 on the two different sets of calls that I sold. I sold a total of -4 contracts on Tesla at two different strike prices out to October 17th. Now, when you're selling calls, it's the opposite. Now, remember that when you're selling calls, you are forfeiting some of the upside or renting out your shares over the strike price. And so with my strike price at 355 and 400, I've given up some of the gains on Tesla shares that I own. However, I've been okay with this because I've got still a very low average price in the stock around, like I mentioned, $235 a share. That's right around this area here. So I've done really well in the stock and I am willing to part ways with it. However, if we do get some downside in the stock, what I may do is I may buy back those 400 calls and just let half of my position get called away at the 355 strike price. However, we still have a few weeks left and stock price is very, very volatile for Tesla. And one of my really boring picks, NextEra Energy, is actually looking pretty good. This is the company that owns Florida Power, and it is a utility company, which is an area of the market that I still really like. Utilities to me have potential upside for a number of reasons. Number one, I think that with rate cuts, they're very debt heavy companies. So it improves their borrowing cost if they can refinance some of their debt. I'm up $733 or $35, up about 4% on this position, which is not a lot, but the stock doesn't move a lot like some of the more excitable names out there. I also own XEL. This was another one that I like. This one's doing really well. I'm up $1,500 on this one, about a 7.7% gain on the stock. And I do think that we have more room to run here on this one. What I may choose to do on this trade is actually look to trail a stop. If we can get some higher lows, I'll look to potentially move my stop loss on this trade. I don't have a current stop loss, but I will probably put a stop loss in if we can get some sort of higher low to form on this stock. Another stock that I've been watching, which by the way, XL and NEE at the time that I took the trade were both getting high scores on the top stocks watch list. Another stock that's on my watch list is UNH. This is Unitedhealth Group. Let's take a look. So UNH, I'm looking for a pullback to the 38.2% retracement. If we take a look at a weekly chart, stock's been killed, but seems to have been trying to form a bottom here. I don't own any shares currently, but I am looking for an opportunity to buy the dip if UNH were to pull back to around this 38.2% retracement. So it continues to be a stock on my watch list. Here's a look at one of the stocks that I own in my portfolio, HOOD. This is Robinhood Markets. A little bit of a pullback here. Would love to see the stock kind of continue to pull back in the meantime. Yes, I am long, but I also have sold some calls against my position. So I wouldn't mind at all if the stock took a little bit of a breather to the downside. This is a stock that I do believe in for the long term and really like the idea of getting some bigger dips. I mean, if we do get, a larger dip back down to $100 a share or lower, that to me would be an opportunity to potentially pick it up for the longer term. Here's a look at Coinbase, another big stock people watch. Kind of gotten hit hard here recently, especially with crypto down today. Here's the ETF for Bitcoin, IBIT, sort of soft range consolidating here. Same with Ethereum, actually down 4% today. So a bit of a slide here for cryptocurrencies. And we're also seeing some of the big guys pull back a little bit here. Here's a look at Meta, potentially putting in some sort of a double top here. But as they say with double tops, you really don't know it's a double top until it's truly a double top. So if we were to break support and start structurally turning lower, then to me that would signal, more downside. Like if we started to see breaks at support levels, perhaps we do see a little bit of a cool off in the Mag 7 trade. And one way to track the Mag 7 is by using the ETF MAGS, which tracks the performance of the Magnificent 7, which is of course those big giant names like Nvidia, Apple, Amazon, Meta, etc. So overall, stocks have been doing remarkably well for the big mega tech stocks. And so I don't think at all that it's unreasonable to think that we could see a little bit of a consolidation or pullback in these names, right? They don't go up straight forever, right? You typically do get these big stretches and then you have consolidation or pullbacks. And so I'll continue to watch the CTF, but I do think that there is some downside in the short run for tech stocks as perhaps people come to grips with the idea that we're not going to get a ton of rate cuts. If that is sort of the new norm, if we're going to see some economic resiliency that causes the Fed not to cut rates, to me, if the stock market pulls back on that, that is a buying opportunity personally, I think. Here's a look at Oracle. Oracle gapped up huge on their some of the exciting news that we talked about. Consolidating here, curious to see how it plays out. This is sort of the low of the last few weeks. We are at least trying to hold it for now. Watch to see if the stock can hold this area. That could potentially signal some further upside. And if it breaks this level, I wouldn't be surprised if we do actually go to fill the gap in the next few weeks. So watching where this candle lands today actually could be a pretty good tell. And just a reminder, if you want access to the tool that I'm using to scan stocks like I have in this video so far, it's called the Stock Box. Stock Box is available on our website or linked in the description down below if you want to explore it further. And what the Stock Box specializes in doing is scanning technical readings, sentiment readings like institutional buys and sells, or analyst ratings for particular stocks that you might be following. And it also looks at the financials and determines whether stocks are looking expensive or cheap relative to their own historical averages. It's what I use to find each of my trading setups when it comes to stocks. And if you're interested in getting a copy, all the information can be found in the description down below. By the way, we do also have a support team. So if you have any questions, you can also chat directly with them using the link in the description. At least following the 9:30 open, we are seeing a little bit of a buy the dip kind of already starting here. We'll see if this can last, if it can follow through, but watch how this candle closes today. If this immediately goes to fill the gap that was opened here today, I would call that very bullish and constructive for price action. But if we do end up sort of controlling or bears control the narrative and push us back down towards the lows by end of day, I would say that that would signal perhaps a little bit more weakness in the coming days. Another stock I'm watching pretty close right now is actually Amazon, ticker symbol AMZN. What we can see here is that it's testing a level of support. I'd be really interested in potentially adding shares if we do come down to this really strong level of support. The August lows that were sort of formed here and rebounded from, that's around $212 a share. So I'm going to watch Amazon closely from here to see if we can get a little bit more of a pullback on this one. Another stock that I own and like is Uber. Uber Technologies, if we take a look at ticker symbol Uber, UBER, stock still looks really constructive. You have a really strong overall upward trend. I would love to see this stock pull back a little bit, which would give me a chance to actually pick up some more shares. I do own Uber already, but would like to build a bigger position and potentially take a trade on the long side of this one. I also talked about recently Mastercard. The valuation on the company on a relative to 3-year history looks pretty good. We are pulling back. You can see we tested this 570 level. Buyers were not able to hold that current area. So I'm going to keep an eye on this one. If we are talking about a deeper retracement on the stock, perhaps we're going to see a move down to like $5.50 per share, but we'll see. And just a reminder, if you're enjoying these videos and would like to see more of them showing up in your feed, consider subscribing to the channel and hitting the thumbs up button. It really tells the YouTube algorithm to feed more of my content to you. So if that would be helpful to you in your trading, investing career, then continue joining me on this investing journey that I'm on myself. If these videos are helpful to you, like I said, the easiest way is just to subscribe. Thanks so much for watching, and we'll see you next time.